Now going into our next pair here, I usually don't spend too much time with these crosses. Euro Swiss franc, again, we can see we've got a very clean signal from vantage point to the downside. We got that. Essentially that breakout took place at the middle of December. Nothing much has really changed here. We've closed the week at 147.28. Key levels to remain short would be 147.96, 147.43, and 147.23. However, the major resistance line is at the 147.96. Now, so far this week, that area has not even come close to being tested. This thing is, you can see that we're running flat on the predicted TSI from vantage point for essentially the entire month of January. We're running a flat signal. So the potential for this thing to snap and break higher is very, very high at this point. So I would be very cautious getting into short positions on this, and actually I would probably look at counter trend long positions around that 146.50, 146.70 area, getting ready for a break on this currency higher. Now, looking at the US Japan, again, we've got a fresh crossover here from vantage point. Very important that everybody can see this. We can see that the market, these candlesticks have moved below the 18-day predicted moving average from vantage point. They're continually moving up and bouncing off of it and then continuing to move lower. This fresh crossover here, we are in oversold territory though, to be perfectly honest, on the predicted RSI, so we may get a bit of a bounce. However, again, the yen currency futures point that the yen is going to gain further strength with the US dollar, so we really need to keep that in mind. Now this may bounce and we may get out of here. We can see it's kind of running flat and it's a very fresh signal, but that could also be some very, very good opportunity for shorts just below this 91.11 area. So again, identifying the major levels of resistance right now, 91.11, 90.87, and 90.40. I suspect shorts at the 90.40 area to start the week would be potentially a quite good position. So we've closed at 89.89 below all the major resistance levels. We've got the fresh crossover. Not much here is pointing towards yen weakness here at all, and in fact it's the exact opposite. So important to keep that in mind for now. Now, Euro British Pound, I'm not going to spend much time on this. We've got a major resistance level at 88.55, 87.88, and 87.39 with a close of 87.73. Shorts heavily favored while below this 88.55 area. I suspect we're probably going to break we're going to break back below the 87 mark by midweek, very likely. So any move towards this 88.55, good opportunity to set shorts there. Now moving into the Euro US, I'll spend a little bit more time with this. We can see that Vantage Point was very reluctant to put out a buy position on this, and was a very accurate call despite the volatility and the move up towards this 146 area. We've closed the week very soft at 141.36. I believe we've got as low this week as the 139.90 area. So again, shorts heavily favored while below 143.41. That's our major level of resistance right now. 142.47 is another critical level, and 141.44, which is not likely to come under too much pressure. But again, I think that what's going to happen here to start the week, we're going to get a move somewhere between 141.44 and 142.47, which will be subsequently followed by a huge sell-off. So everybody that was taking profit to finish the week is now going to be looking to get back into fresh short positions to begin the week. So we'll be watching for the volatility, but again, shorts heavily favored while below our key resistance level of 143.41. Now moving into our next pair, New Zealand US dollar, we can see we've got a fresh crossover here that's taken place just below the 73 area. Key resistance right now, 72.73, 72.50, 71.53 with a close of 71.01. So in short, on the New Zealand US dollar, we remain short while below key resistance at 72.73. All our indicators suggest here that it has plenty of room to extend. So we'll be watching that one again throughout the week. We're going to have to keep an eye on commodities again to see what happens with the New Zealand dollar. But for now, everything points to further New Zealand weakness here also. Australia, US, pretty much the same picture, a little more reluctant to put the confirming signal out there. Key resistance right now, 91.29, excellent area to enter into shorts. 91.32, 90.60 with a close, very soft close of 90.07. So again, unlikely that Australia-US is going to move higher. We can see that we've got a very significant amount of resistance in this 93, 93.20 area right across the board, dating back to the middle of November. We can see the candlesticks, 1, 2, 3, 4, 5, 6. There's about 7 or 8 candlesticks here supporting that 93 area. I know the market was trying to get long on Australia-US, but it's just very poor timing getting into long positions right now, in my respectful opinion. So again, we stay short while below this key level of 91.29. Any move towards that area is a good opportunity to set shorts. Now, looking at the U.S. Swiss franc. Again, the same as the Euro-US, very little difference in trade. Respecting what I was saying about the Euro-Swiss franc, if in fact I'm correct and that begins to start to move higher, then this is going to put further upward pressure on U.S. Swiss franc. So right now what we can do is we can identify our key levels. We've closed the week, a very strong close at 104.18. Critical level here of support, 103.09, 103.37, and 103.92. I suspect a move somewhere between 103.92 and 103.37 to start the week, at which time would be an excellent opportunity for us to get into buy positions. All stops should be below the 102.50 area to stay out of that broker radar. Now, going into our final pair, we're looking at the British pound US dollar. We can see here that this is not yet put out the confirmed sell signal here. I believe that this is going to bounce. We've closed the week at 161.14. Key levels 162.04, 162.20, and 161.85. We need a sustained break of 162.02 to get the pressure back onto the top side. Right now we clearly have some downside pressure with the yen strength and the US dollar strength. That's kind of a double hit against the British pound, not to mention some of the other currencies. But for now, I do believe that this area is likely to hold in this somewhere between 161 and 160 is likely to hold, and we're probably going to start moving higher. But again, this is a good time to stay out of the British pound US dollar because we do not have we do not have a confirmed buy or sell signal at this point. So therefore, when we don't have that, it's always best to just stand aside. So that is the Forex market outlook for the week of January the 25th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.